Have you ever sent money to someone and wondered, why does it take hours or even days to arrive? In 2026, a different type of digital money is getting a lot of attention. It's called a stablecoin. Unlike Bitcoin, which can rise or fall dramatically in price, a stablecoin is designed to stay close to the value of a real currency, like the US dollar. So, if one stablecoin equals $1 today, it's meant to stay close to $1 tomorrow. But why does that matter? Because stablecoins can make sending money faster, cheaper, and available 24 hours a day. Imagine sending money to a friend in another country. Instead of waiting for a bank to process the transfer, a stablecoin transaction can often be completed much faster through a blockchain network. That's one reason banks, payment companies, and technology firms are paying close attention to stablecoins. Some experts even believe they could become an important part of how digital payments work in the future, although their long-term role is still evolving. But there are risks too. Not every stablecoin works the same way. Some are backed by cash and government bonds, while others use different systems to maintain their value. That's why investors should always understand what they're using before putting money into it. Here's the biggest takeaway. Stablecoins aren't designed to make you rich overnight. They're designed to make digital money more useful. Whether you're interested in crypto, investing, or the future of finance, stablecoins are a technology worth understanding. If you enjoyed this video, don't forget to like, subscribe, and join DollarVest for simple explanations about investing, cryptocurrency, and personal finance. Thanks for watching, and I'll see you in the next video.